Okay, so we've got this new Forbes investing guide, and it's focusing on new ways to build wealth, alternative investing, and we've got everything from gold, investing in gold, to farming, to peer-to-peer lending. Deborah, you focused on IRAs and kind of going rogue with your IRA, I think is the title of your story. What are the alternative ways you can use your IRA?
Well, the key is go rogue with your IRA, but don't fall for rogues. My story features a woman who inherited a gigantic IRA from her father. She wanted to buy a warehouse in Pittsburgh in an up-and-coming section. She didn't have the cash. She wanted to do an all-cash deal. So she used part of her inherited IRA to buy this building. There were a couple things she needed to be aware of. One was that there are a lot of rules that govern what you can and can't invest an IRA in, and the extent to which you can commingle or can't commingle your personal assets with the IRA money. So for example, she and her husband bought this Pittsburgh warehouse. He is a recording artist. He wanted to use one floor for his recording studio, but that would violate the IRA rules. So her lawyer devised this complicated scheme where they divided the building into 3 limited liability companies, and each one bought a floor of the building. So the IRA bought 2 floors and they personally bought 1 floor. That's one thing to be aware of. Another is that people who are looking to invest IRAs in non-traditional assets are now falling for an incredible number of scam artists who realize that this is where the money is. They're running Ponzi schemes and other things, and then they're steering IRA money into these non-traditional investments. That's something people really need to be aware of.
So Dan, you looked at one of these scams, these IRA scams, specifically about pensions, people investing in pensions. Talk a little bit about that.
Yeah, the headline is Retiree versus Retiree, I believe, and it really is IRAs investing in other people's retirement. It's sort of, this one began on a paddle tennis court. The guy was a regular player with somebody else who had a great investment scheme. It was paying 10 to 12% a year, which this was back in the late 90s, but still that's a pretty good return. What they do, and they're still doing this, and it's happening around the country, is they go to a retiree and say, hey, we'll buy your pension up front. That's fine. You can possibly do this. It's a contract, but what they didn't disclose is this really is more like an unsecured personal loan. You're giving people a bunch of money up front, and you're hoping that they're going to pay it back out of their pension proceeds. This company doctored this up with a very elaborate contract, but ultimately that's all it was. When these people went bankrupt or just decided not to pay, it's not really an enforceable contract. And if you go on the web and look for websites, it looks like this business is still active. The people peddling it seem to say that these are secured loans, but they're not secured loans. You can break them because you can't really sell your pension.
Why are investors searching around for alternative investments? I assume it's because the market is so volatile, and people are kind of scraping for new ways to kind of build wealth.
One reason that people are looking at non-traditional investments right now is that they've just lost faith in the stock market, with good reason. And I think they're concerned about financial institutions now that are betting against them, as we saw happen in the Facebook IPO. So while people have lived through an enormous stock market run-up and they'd like to believe that they can invest wisely in the stock market, I think increasingly people think the deck is stacked against them and they're looking for other things to do with their money.
And we even have a story in there on how you can actually invest in personal loans. There are these websites, Lending Club and Prosper.com, where you can get from, investors are searching for yield from 6 to 10% on what would be relatively safe. But again, people don't trust the stock market. Dan, you did a story that looked at kind of the returns on alternative investing. A lot of professional investors look for hedge funds, 2 hedge funds, 2 venture capital as alternative investments. What did you find?
Well, it's the same dilemma. Yeah, they're saying, well, we're disappointed with the stock market. We have to do something else. Pension funds across the country are allocating in lockstep, 15, 20, 30% to alternative investments. John Swenson of Yale kind of popularized the idea. The problem is the costs are really high. People don't consider, as one source told me, you got to think about what's this going to look like 10 years from now? How am I going to feel about this investment? What's my exit strategy? Everybody talks about the exit strategy. Facebook had an exit that didn't turn out so well. What's your exit going to be from a private equity partnership that you sign up, you don't know when it's going to end, you have to put in cash regularly without knowing how it's going to turn out for you. You have to think about this. Also, the Kaufman Foundation recently put out a very devastating report on venture capital, and the bottom line is buy an index fund. I mean, their experience, their real world experience with venture capital investments going back to the early 1990s is basically nothing they invested in after 1995 returned as much as a Russell small cap stock index. So much for the glamour of venture capital.
Yes, but speaking of venture capital, we have a terrific story in the issue by Ashley Ebeling about an uncle who happened to be a venture capitalist and invested in his niece's flip-flop business. So the idea of keeping the money in the family is another possibility right now. If you have a great invention or a terrific idea, find someone in your family who's willing to make you a loan and invest in your business. You're investing in yourself, and your family member could reap a handsome payoff down the line as well as you.
If you can deal with the complicated dynamics of that one, yes.
That's a separate risk factor.
Yeah, exactly.
So you both are kind of an investing age. Would you both consider alternative investments for your retirement?
Well, I did invest in my own business before I came to Forbes. I started a book publishing company, and I invested in self-publishing my own book, which turns out to have done better than it would have done if I had accepted one of the offers I had from the big publishers. So my feeling at the time when I started writing the book, in late 2008, just as the market tanked, was that I knew this product and I knew what I was investing in. So I felt very comfortable putting some of my money and my sweat equity towards it.
But your family members invested in your, besides your husband, invested in your new business?
No.
No.
I'd invest in education. That's always paid off for me. And I think certain things, if you understand them really well, commercial real estate, a lot of work, it can pay off very well. It's an alternative investment. You can do that on a relatively small scale. I don't do it, but I'm very familiar with how it works. And you know, people make a lot of money in it, but you have to be there. You have to be right on top of it. But that's a good alternative, that sort of thing that you can understand fully. I have a friend that tunes pianos. His best investment is old Steinways, but because he knows what they're worth before he tunes them and fixes them up and what they're worth afterwards. And it's the only thing he's ever been successful at investing in, he'll tell you.
Great stuff. Thanks, guys.